be a quick little scan going forward and kind of some names that I like and just what I've been seeing overall in terms of the broader equity market movements. Yeah, so I think the last video maybe was about a week ago, and I was discussing the opportunity. I think it was this candle right here. Yeah, a week ago, around the 13th, maybe a little bit sooner than that. I was discussing the opportunity and potential for this to result in a higher low in the INWOG from the November 10th gap and potentially push to new highs just within a larger context of a distribution being built out and our preliminary sign being put in October 10th. But also understanding the window that we're in and how these ranges are wiped of demand, right? We wipe out a lot of the buyers, we exhaust the highs, and we change the hands, right? And it's very similar to this window right here, right, where we had the election gap to play with, the sweep of the lows of that November 6th candle, the weak rally to new highs, the initial footprint on the 18th, the December OPEX candle being our first initial low of a 3 lower accumulation within the election gap into the full fill on the 13th, and then the rally that began to kind of exhaust itself into the January OPEX. Well, this was January OPEX. Into the February expiration being the kind of interim top for this Q1 sequence that resulted in a 21% decline from the all-time highs. So when we see something like this, it's very, very evident that we're having a similar range become established. Obviously, it's not going to be the exact same, but it is very, very reminiscent of this range, and it's just understanding the handful. There's maybe 3 to 4 short side windows in terms of a broader focus in the equity market that occurs per year, right? And this post January expiration is one of them. And that's kind of what I think is going to end up being the play here, right? So we see the gap down on or we see the kind of sweep of these lows on the 5th, or on the 10th, 7th. The gap up, the kind of exhaustion that's shown, the fill of the gap, and then we see a continuation on the 14th. But all in all, this is relatively constructive when you consider what's going on here. We see a notable bidder throughout yesterday's session, or throughout Tuesday's session. We see the overnight gap filled from yesterday's session, and we see those lows taken out with a relatively appealing kind of sequence. QQQ is my preferred vehicle here, but understanding, SPX and SPY as well is pretty pivotal. But we see these lows taken out. We see a nice pop yesterday and some consolidation into the NVIDIA report. Now we have a 1.5% gap up. So for me, it's just understanding, how do you want to play this, right? For me, QQQ is probably the best vehicle because we have the 3 lower accumulation underneath the weekly lows from the week of the 20th, right? We take these lows out on the 7th. We see a pop. We see the exhaustion. We see those taken out on the 14th. We see a pretty constructive push higher. And then we see them taken out yesterday or Tuesday with an influx of volume and then reclaimed yesterday for the daily closure with a nice pop off of the NVIDIA report, right? And all of this, I think, is going to be an easy trade on December expiration to 620 and 630 in terms of just targets that you want to focus on, right? And if not, if we do end up seeing like a lower high put in, I would expect the October 10th candle to be taken out. But it's all kind of just understanding the windows to play, right? Like I said, there's a short within here. There's a long within here. There's even a long here if you want to take that over the weekend. That's a little speculative, though, but if you're a kind of ballsy guy. But it's all relatively constructive, and it all makes a lot of sense, in my opinion, and it all gives, you all always have relatively clear targets in terms of gaps to focus on, right? So definitely understanding how you want to play this range is pretty crucial. Like I said, there's a select. I really like a lot of commons, and then just taking stabs throughout here is pretty big as well. Just taking stabs throughout these internal moves on a week to a month out expiration. Smaller size in terms of your leverage focus, right? I still like UNH commons. Obviously, you can take the leveraged commons here, cover into the 378 gap from the 13th. and then you can rebuild out the position here. I would prefer a little bit lower than 290, maybe sweep the August 15th gap, because we do see the exhaustion very notably. But you can take the shorter term position, you can have the longer term position. I still like Nike Commons. Really seeing a nice influx of volume on these weekly candles and the preliminary signs of like a last point of support being put in on the weekly perspective. I think that this will be a great name going forward. And I think that there's a Commons opportunity setting up in a name that has offered a few opportunities, but nothing crystal clear quite yet until now. I like forward Commons. I don't think forward options are really vulnerable anymore like they were within this window and maybe on a flush off the report. But I do think that Ford is going to be a phenomenal trade to 15, potentially even to 26 next year. I mean, that's speculative, but I really do like this name. I really like Snap Commons. There was an options trade that you could take here, but for now, this is just a speculative Commons position to $9.30 to $10, and really waiting on the opportunity to present itself. Similar to Path, I really like Path Commons. Discussed that a lot. I like UPS Commons. We're now closing in on 3 inside weeks. But this is just like a kind of passive position from $90 to $100. I really like Meta Commons on like a meta leveraged ETF, kind of risking this May 12th gap, targeting 700. OXY is a little speculative. I don't mind energy right now. Like I do like energy going forward, and I think that in terms of a long-term position, OXY is a phenomenal buy. Like I really like OXY in terms of if you had to give me like 5 names to pick for the next handful, like couple of years, I really am confident in this OXY name, in this OXY chart. But if I had to take a shorter term position, I probably wouldn't be super focused on this. I would really love to see the April lows taken out. I don't know if that's going to be the case, right? We have XLE looking relatively constructive here in terms of internal higher lows being put in. We have ZOM looking kind of nice as well, getting the push to the April 3rd gap fill and seeing a potential higher low being established. But long-term position, I like OXY. LLY is kind of not really much you can do with this anymore at new highs, right? Yeah, new highs. This is a great chart to bookmark. Snow is pretty clean. I kind of hit the targets on that. Same with Intel, although this could maybe offer something if we see a higher time frame weekly sweep of the gap from September. Lulu, CRM, these are both watches that could potentially be Commons trades, but wouldn't be anything I'm super focused on quite yet. Although I do really like CRM for a Commons position to 300, although it's a little speculative. Hood, Palantir, and TSM are some higher time frame distributions I've been focusing on. Lyft doesn't look bad. It also doesn't look crazy good. There was a great opportunity for an 80% rally on Commons into the May 2022 earnings gap. Now there's just an opportunity for some runners. XYZ, we see a really nice higher low put in on this intraday pop from yesterday, intraday 7% candle. This is a really nice chart that could be putting in a higher low here. That could push 100. It looked pretty nice last Q4, and then we see the decline, and we see these gaps filled from November and October of 2023. I would have maybe liked this to have been taken out, but this isn't a bad name. And this is kind of underperforming ARKK in general and can see a nice pop. This is a good weekly chart. This is another name. If you had to give me like a couple of Commons positions, this would probably be a focus of mine. Not on like massively insane size, but when you see like a climax put out on the report and the subsequent news pop yesterday, it's a little bit of a green flag for this name, right? That's pretty much it though, right? Like I have about, if in terms of Commons trades, I have a handful of names that I really like. Some of them being more shorter term focused, like a Snap or a Path or a Meta or a UPS. Some of them being longer term focused, like a Nike or a UNH or a Ford, or a CRM or an OXY. And then you have short term opportunities when it comes to QQQ and SPY, both ways, right? We have OPEX this week, right? Yeah, we have OPEX this week. We also see a really big VIX pop, and we see a lot of peak fear in general with a lot of risk on assets. I mean, Bitcoin has declined like 30%, almost a little bit over 30% in the past like couple of months, month and a half. A lot of people like see that, and they're very fearful when it comes to Bitcoin and just risk on assets in general, right? And I don't think now is the time. I think in a higher time frame context, yes, but I don't really think now is the time to get super aggressive. Man, I remember when I didn't short it off the report off the pivotal February and January gap and February highs, and then I shorted these two candles. We lost a bunch, and then I shorted. Oh man, the June sequence really got me fucked up. Man, if I could go back, I would have done a lot differently when it comes to the June and July sequence, but whatever. In May, whatever. Can't do anything about that. Like this is a higher time frame distribution. At minimum, this declines to mid to low 100s, but maximum this declines to $56 to $75. Right, like 50 to 75. Like these names are developing higher time frame distributions. It just takes time, right? And that's all that it matters in terms of understanding when to position yourself which way, right? Like I do think that this is still kind of a bubble, if I'm being completely honest. But how do you want to execute that? Well, if you're a long-term investor and you think it's a bubble, most likely not having a lot of risk on positioning and taking your profits from the April, the 2020, the 2022 lows, right? August 5th lows, if you're a longer term investor. If you are a shorter term investor, you're a trader, taking these windows and opportunities to position yourself appropriately, but also understanding the bigger picture um, going on, right? So, I mean, that's pretty much it. Like, there's really not much else I can say here besides those handful of names that I like and how I would appropriately want to position myself in them. So, good luck. Have fun.